My good friend Ray hit me up the other day and asked me to do a video for him covering investing, specifically investing for noobs. He wanted to know what's the best way to start, what are the different options, and was wondering about things like robot advisors, brokerage apps, etc. etc. So, if you're like my man Ray, I have a million newbie questions. Stick around. Today, I'll be covering key investing concepts and common investing terms to help you get started with your first investment. And I'll also share my thoughts on what investment will give you the biggest returns. Winning at investing is all about having the right mindset and developing the right habit. At a basic level, investing is all about using your resources now in the present with the expectation of some sort of gain in the future. Those resources could be money, some sort of skill or talent, or something even as simple as a new book and some free time. It is super important you understand this concept because whatever you do now will always determine your future. This means that in order to be a successful investor, we must first develop our vision, a mental picture of where we want to be in the future. I know most people's vision of the future is, yeah, I want a lot of money. But a vision is more than just a picture or idea of your future outcome. It must be combined with your strategy, which is concrete steps on how to get there. Once you have your vision and strategy on lock, we need to work out our investment horizon. Simply put, that's our timeline. How long do you want to wait for a return on your investment? There are three common investment horizons: short term, which is usually less than a year, medium term, which is between 1 and 7 years, and long term, which is anything more than 10 years. Investment horizons help you to evaluate your investment risk. Investment risk measures the probability of you getting the expected return on your investment, the risk versus the reward. Short term investments are generally riskier but have a very high rate of return. Medium term investments have a moderate amount of risk but offer lower rates of return than short term. Long term investments are the least risky and have the lowest rate of return, with the key benefit there being predictable results. So, we know our vision, we know our strategy, we know our investment horizon, and we understand investment risks. Next, we want to build our investment portfolio. Your investment portfolio is a basket of investments that you own, the collection of assets that you invest your time and money into. It could be stocks, bond, real estate, gold, Bitcoin, etc., etc. Here we go. A successful investment portfolio depends on two key factors: your risk tolerance and the investment's rate of return. Your risk tolerance is your individual assessment of how much risk you are willing or able to take on. Your rate of return measures the gain, usually in the form of a percentage increase on your principal. Be careful here because you may be willing to take on more risks than you're able to. You need to find the perfect balance of risk and rate of return. Bad investments can cause you to lose a lot of your hard earned money. Do your research, keep your emotions in check, and pick the right investments for you. Let's kick it into overdrive. We've done our very careful research and we've decided that we want to keep it simple and start our investment portfolio with stocks. In order to buy stocks, you need a brokerage account. There are tons of different brokerage apps out there. Most offer commission-free trades and some even offer fractional share trading. This is the ability to purchase a single piece of a stock. This is good for beginners or persons who can't afford to pay the full price of a stock. We're beginners, so to keep it simple, I bank with Chase, so I opened up my brokerage account with them. The main benefit I found with this is that all my banking is in the same place. I can transfer money between my brokerage account, checking account, and savings account almost instantly. If you want to know more about setting up an account with Chase, check the link in the description below. Once your account is set up, you'll be presented with a few options. Self-directed, where you manage your investments on your own and move money around as you see fit. Generally, this type of account is free. Then we have personal advisors, where a team or individual manages your money for you and helps you to choose your investment based on your financial goal. This type of investing comes with advisory fees and usually have minimum investments starting at around $25,000 and up. Next, we have automated investing, robot advisors which automatically invest your money based on your desired preferences. This is similar to the personal advisor option, but with bots, which means the barrier to entry is much lower and it has lower fees. Personally, I use the self-directed option. I prefer to be a little bit more hands-on and I found that this helped me to learn a lot more about investing in a really short period of time. But robo advisors may be a better option for you if your time and investment amounts are limited. The key advantage of robo advisors is that you can simply pick an investment amount, choose your investment horizon and risk tolerance, hit cruise control, and start investing. Your investments will be automatically rebalanced over time based on your preferences. We've covered a lot of information today, but before we move on to the best investment that you can make this year, let's recap. The first and most important step you will take is defining your vision and strategy. The key part of your strategy will be to determine your investment horizon and your risk tolerance. Next, you thoroughly research your investment options and you pick a reputable bank or brokerage application for your brokerage account. Then you start to build a solid investment portfolio which aligns with your vision and strategy. Okay, so let's get real. The one investment that is guaranteed to give you the biggest return is going to be time. Time is ultimately your biggest asset. Investing time into improving yourself will always be the cheapest, low risk investment that will yield the biggest return. Grab a book, learn a new skill, or watch a YouTube video on how to do something you've always wanted to learn. Check out the description for 3 really good books that helped me to build my first investment portfolio. Challenge yourself. Over the next 30 days, I want you to ask yourself each day, what can I do today that would increase my chances of making tomorrow much better?